Hello and a very good morning to all those who've tuned into this live broadcast here on News 9 Live. You're watching Business Plus. I'm Krishna Kumar and joining me in the studio this morning as always is Suyash Maheshwari, my friend and colleague. Suyash, very good morning. Let's begin the show as always, the morning edition of Business Plus with a check of how India's stock markets have opened for trading this morning. Suyash, talk to us how sensex and nifty, which closed well into the green yesterday, how have they opened this morning?
So Krishna, both headliners continue to build on the momentum that we saw in the markets yesterday, and in fact we saw a good opening today where Sensex was up about 125 points or so in the morning trade, and it was just marginally below the 66,250 mark. Nifty also saw a rise of about 0.14% and was trading marginally below the 19,750 mark. The overall breadth of the market was also leaning towards the bulls. Around 1,500 shares were trading with advances, meaning they were trading in the green, whereas only 480 shares were trading in the red on NSE. Now the index has, both the indices have paired some gains since the morning gains, and BSE is currently trading around 0.17% lower, just above the 66,000 mark. Nifty meanwhile has slipped below the 19,700 levels.
All right.
And we are also seeing a spike in volatility. India VIX is up about 4.2%. Now this is expected because today is the futures and options monthly expiry, so perhaps throughout the day we'll see volatility being high in the market. Now talking about broader markets, Krishna, the broader markets were largely mixed today. The Nifty Mid Cap 100 was trading with moderate losses. Currently it is flattish. The small cap index, on the other hand, continued to build on the momentum. It was up about 1% yesterday. This morning, the last time I checked, it was up about 0.58% or so. And among sectors, let's talk about sectors as well.
Yes, of course.
So, IT and FMCG, which were actually the outperformers yesterday, saw some profit booking this morning. IT and the FMCG pack both came under pressure today, whereas metals and PSU banks, metals which also has seen a fair bit of run up in the last month or so amid expectations that perhaps Chinese economy will recover, they came under pressure once again once there were news that Chinese economy will perhaps not recover as soon as we were hoping for. So metal packs saw some buying interest at lower levels. It was up about 0.8% or so. PSU banks also build on the gains, but the private banking sector, Krishna, has continued to underperform the market and PSU banking pack as well, as we have seen, and it is weighing on the Nifty banking index, which by the way was down 3.5% yesterday, and it is perhaps the only sector which has not made fresh record highs in the recent run up, where we saw Nifty scaling 20,200 mark in a span of 5-6 days. It ran up about 1,000 points or so.
So right, so that's the broader markets and the sectors in action this morning. Suyash, they're wondering whether all that rally in mid-cap is sort of fizzling out. There's profit booking this morning on mid-cap stocks. We saw mid-caps and small caps up much better than Sensex and Nifty yesterday morning, and now there is it's flattish opening to the markets this morning, you would say, isn't it, Suyash?
Flattish opening to the market. It opened in the positive, but we have, as I said, volatility is expected to remain elevated.
It's triple witching day.
Yes.
It's triple witching day, or the F&O expiry day, and those days always highly volatile as far as India stock markets are concerned. Suyash there putting it into perspective. Suyash, of course, all of this will boil down to the stocks in action this morning. We will talk about that, but before that, we have our special market guest joining us live this morning. We have Mr. Kush Bohra joining us live on this broadcast. Kush, wonderful to have you on the show as always. Look at what's happening with the markets. I mean, we were just talking before the show began. US markets mixed, European markets mixed, Asian markets mixed, Indian markets mixed this morning.
Hi, first up, good morning, guys. What fab energy, and it's so good to be back on the show. Well, it's not such a bad thing, really, if you ask me, and I'll give you a very simple reason. We've seen a sharp downturn from what 20,000, 20,100, 200 odd kind of levels. But for the last 3 to 4 sessions, we've held that 19,500, 19,550 kind of level for 3 to 4 sessions comfortably. Now, a couple of reasons why we are seeing a bit of a consolidation, at least today, is that, the Nifty is trading in a tight range between its 50-day moving average and its 20-day moving average. So that is, bound to play. Plus, if you see, I think the good old days of, volatile expiries where, a lot of traders used to do those hero zero trades on expiry, like, all or nothing kind of trades. They're actually a matter of past because the option writing has actually increased so much that if you historically see the last 12 to 18 months, the expiry day volatility, especially the monthly expiry day volatility, is actually shrinking. So even today, if you see, we opened in the positive, the Nifty has gone down. But if you look at the options data, there's a very clear base at 19,700 on the downside and 19,800 on the upside. So I think that is perhaps where we should end. From the expiry perspective, give or take 50 points. Bank Nifty, I was listening to your conversation, and you're right. See, private banks aren't participating, and PSU banks are also starting to see some kind of profit booking. But the good thing is that some of these stocks are very close to their support levels. So a rebound on Bank Nifty cannot be ruled out from here, especially once the expiry hangover is over. Plus, don't forget that tomorrow's a working day, and then after that we've got the long weekend coming up. So perhaps one more day of consolidation and markets might move or give a clear directional play. Once the next proper week starts, and we've got some key data lined up from India and US. So I think some volatility will start picking up from next week onwards.
Right, including the industrial production data, IIP data that we're looking forward to as well. Starting with that, there's more data coming out next week as well. But before, Suyash has tons of things to ask you. But before we get to that, I have a quick question to ask. Yesterday morning when markets opened, you had both the Nifty and the Sensex down just about 0.5%. But whereas the mid-cap and the small-cap index were up 0.5%. And at the end of the day's trading session, when Nifty and Sensex ended 0.5% up, mid-caps and small-caps ended 1% up. But this morning, both the mid-caps, especially the mid-caps is under pressure. It's flattish in the red. Small caps still continue to do well. Tell us, is there a story still there? Because some say these mid-caps and small-cap stocks are already overpriced because there's enough and more value buying has taken place in this space already that there is no more value buying, and probably there's time for consolidation and even correction in mid-cap and small-cap stocks.
Also, to add to what Krishna is saying, we are seeing that the number of stocks in the mid-cap and the small-cap, that were participating in the run-up, they have reduced. Now, less number of shares are participating. So, perhaps that adds to the argument that valuations, at least overall, look stretched.
Kush, your take?
So I'm happy when I hear this because the more the investor community remains cautious and conscious and afraid and worried about this space, the more it is going to rise. And let me just give you a couple of cases in point. About 18 to 24 months back, everyone was worried about the kind of move that we were seeing in the defense space. Even now, I think not too far back, just about a month or so ago, everyone was worried about the kind of move PSU banks and the entire PSE space has seen, and these stocks continue to perform. So one man's caution is another one's optimism, I suppose. See, I'm not too worried about this whole mid-cap space being under pressure. Of course, there were a lot of stocks that were starting to run up. I mean, there were stocks that we'd not heard of in a couple of years' time, and they were starting to move. So I'm kind of glad that that reality check has come in. But for me, there are these select good stocks which will continue to do well. The froth is taken out, but that does not mean the party is over or the story is over. Even if I look at the mid-cap index, the mid-cap 100 index, it had gone into a bit of an overbought territory. The index is cooling off. But even that has taken support and starting to rebound. So this is a very stock-specific market right now, and as it should be. I mean, as they say, if your panwala started recommending stocks to you, then you should perhaps exit. And that is what happened. That is what was happening about 2 weeks ago, right? So I'm kind of glad that we are seeing a bit of a caution in this space. But for me, stock-specific action is a plenty in this, in the mid-cap and the small-cap space in particular. And I will continue to remain, a buyer on select names, of course.
That stock-specific action you're talking about. Before that, Suyash has something to ask on the broader markets per se.
Yeah, so Kush, last night we saw, in fact, over the course of the overnight, we have seen a 3% or so spike in crude oil prices. Now WTI is hovering around the $95 a barrel mark, whereas Brent is nearing $98 a barrel. Now we were seeing some sort of a pullback in crude prices, earlier in the week, amid concerns that perhaps the economic recovery that we are expected to see from China is not going to come as early as the next few quarters. It will take some more time. Even there were concerns flagged by various analysts about US's economy and the situation. But now what we are seeing is that the inventories back in the US have rapidly fallen, and as a result we are seeing a sharp spike in the crude. How much of an impact do you expect the recent spike in crude to have on the Indian markets?
Also, just to add to that, there is so much talk of a possible massive production cut, a possible one. There is no confirmation on it. Russia and OPEC already have a 1.3 million barrel per day production cut that is ongoing, and we hear that there is a possibility that that 1.3 may go up to 4 million barrels per day of production cuts. Crude is on the boil is an understatement over here, isn't it, Kush?
Oh no, it is. But I think the fact that see, if I look at it from a slightly different lens, right? We did enjoy a lower priced crude, especially from Russia, for a while now. So I think the coffers are fairly full. I'm not saying this is not something to worry about, and you're starting to see some kind of an impact on, let's say, the paint stocks or the tire stocks. So I would definitely be watchful. But the near-term impact for this cannot be ruled out for sure. But look at it in the long run. We've always spoken about the currency depreciating or the crude price going up. But the markets continue to do well. So from a long-term perspective, I'm not worried. From the near-term perspective, let me also bring in one angle, which is we're staring at elections. We don't know, maybe 6, maybe 9 to 12 months down the line. So the domestic impact may not be as much, at least from the inflation perspective. And as long as that is taken care of, I think the economy should hold in good stead. The only impact that I see could be, let's say, on the OMC stocks, on the tire stocks, on the paint stocks. So some of these might get impacted. But right now, just about yet, I'm not worried. See, even RBI had a benchmark number of, I think, about 85 to 90 in their calculations, and we hovered around that for a very long time. Once we breach maybe 100 is when the alarm bells will start ringing. But as I said, given the election year, the inflation impact of this price rise may not be as much on the economy, and that is perhaps a silver lining in all this.
Okay, fair enough. Silver lining. We always keep looking for silver linings here on Business Plus. Stay with us, Kush, because we're talking about stock specific. We're going to get it to our stock specific action. Suyash obviously has a list of stocks in action in trading this morning.
Krishna, let's talk about Vedanta first. Vedanta has been in the news for quite a while now. Yesterday, we saw that Moody's downgraded the corporate family rating of Vedanta Resources, which is the parent company of Vedanta Limited. As a result, the stock declined as much as 8%. It ended 6.7% lower in yesterday's trade. Now, some good news coming in for Vedanta shareholders this morning, and the stock was also up about 1% in the morning. Now, Vedanta is reportedly looking to demerge its businesses into several listed entities. Now, the expectation is that businesses such as iron ore, oil and gas, steel, aluminium will all be listed separately. So, I mean, when we see a demerger, it's largely seen as a value unlocking exercise, and perhaps that's why we are seeing a 1% jump in the Vedanta stock. But to that, I want to add that Vedanta stock is currently trading at a 14-month low. It's it has wiped off immense value from the investors. This year or so, it is down about 35% or so. So, Kush, how is the stock looking on the price chart?
Kush, any silver lining there for the Vedanta stock per se?
Look, you're talking to an Indian cricket team fan. That I think by definition implies eternal optimism. So I won't rule out any kind of up move on this from a very simple reasoning. See, the stock's actually been a great value destructor over the last 12 to 14 months or so. But the only silver lining that I see here is the fact that it's now reached an oversold territory. So a technical rebound cannot be ruled out. Plus, given the kind of news flow that's coming in, perhaps the stock might see a bit of an upside from here. But let's be a little practical. If I were to invest in this stock, then I would have a very small quantity placed just as a tracking stock, as a tracking quantity, just so that if the stock does slip further from here, then I won't be losing too much. It'll probably not pain as much. So if I were to venture a trade into this, I would actually do it with a very small quantity. The stock's gone into an oversold territory on multiple time frames, across all time frames actually. So a technical rebound can't be ruled out. Structurally, maybe it'll take some time before the stock sort of gives a lot of comfort to the investors or trader community as a whole.
Okay. You're talking about Indian cricket team and internal optimism. I come from Chennai. I'm Chennai Super Kings. We're the king of comebacks. I also harbor enough and more internal optimism. But quickly take us to the other stocks in action this morning, Suyash.
Certainly, Krishna. So Dixon Tech was another stock that was in the news, has been in the news for quite a while. Last week we saw that Dixon Tech is perhaps going to set up a phone manufacturing unit near Delhi, and for this it will invest about 400 crores or so. Now this was last week's news. As a result of that, the stock was up about 10% or so in the last 5 days, and it has been performing quite well on the daily as well as the weekly charts. But now today there was news that Xiaomi, both Dixon Tech and Xiaomi has entered into a manufacturing agreement where it will produce smartphones for Xiaomi in its manufacturing facility in Noida. And the stock has not seen much reaction. Perhaps we are seeing the rally that is kind of fizzling out. It was down about 0.2% or so. So Kush, how is the stock looking? Has the rally fizzled out? Is there some buying opportunities? At what level would you be comfortable entering the stock?
Is right?
Dixon Technologies.
Yes. Dixon Tech.
Well, see, it's actually a stupendous move if you see after the after all kind of negative news that we had seen for the last, I think, about 8-12 months in the stock. But the recovery also has been equally phenomenal, and now the stock is approaching its all-time high levels of about 6,000. I know it's a little way away, but if we look at the whole scheme of things, given that the stock has rebounded from 2,600 odd levels, this recovery is quite phenomenal. So if someone's got a positional view on this one, I'm not too worried about this stock going down, because it's made a firm base. Even the rise, even though it has been quite sharp, it's been with a set of pauses and set of accumulations and the fair share of dips. So I think from a positional perspective, I won't rule out a move to 6,000, the lifetime high for this stock. If a fresh entry, someone's looking for, then I think 4,800 is it's a neat stop loss that one can have. But given the overall momentum that we are seeing and the first the stemming of the negative news and now the flow of positive news on the stock should perhaps just push it a little higher from here. So overall setup to me now actually starts looking positive.
Okay. I also noticed a couple of ultra blue chips in your stocks in action this morning. One is RIL and the other is Infosys, isn't it, Suyash?
Yes. So RIL was in the news, and it has been in the news because of the spate of investments that we have seen it picking up for its retail arm. I think there's also talks about it getting another investment to the tune of 600 million
from the Gulf again.
From Gulf, but the TRI data is also out, and Jio has added about 40 million users in July vis-a-vis June, where it added about only 22.7 lakh users. The market share also is inching towards that 40% mark. It currently stands at about 38.6%. But we are not seeing much of action in the stock prices, Krishna. In the last 16-17 months, the stock, it seems to be stuck in that range of about 200 points, where it goes down to 2,300, bounces back to 2,500.
Kush, is RIL a defensive play at this stage? Because not it does, it's still moving in within a range for the last 18 months. It looks like an FMCG stock.
In fact, some FMCG stocks have done better. But yeah, if I include the 200 rupees of Jio, the stock's actually not doing that bad. I mean, it's still at about 2,600 kind of prices, right? But post the Jio financial services demerger, if you see, the stock has been in a bit of a downtrend. Now, this has not always been a trader favorite counter, so to speak, right? It's been more of an investor counter. It's been a positional play. Now, from that perspective, if you have a horizon of, let's say, 12 to 18 months, this may not be a bad time to start buying into this stock, because even historically, if I just don't factor for the Jio financial price just for now, these are the levels where the stock had consolidated about 2,300 to 2,350. The stock had consolidated for a while before it started to make that move towards 2850 kind of levels. So look at it as an SIP opportunity. Have an horizon of 12 to 18 months and perhaps start accumulating. From a trader perspective, yeah, I mean, I completely agree with you. I mean, we can give it a pass, don't get into it just yet. But yeah, from an SIP investment perspective, not a bad idea to start investing now if you haven't done already.
All right, start investing now if you haven't done already is a word coming from Kush. And Another stock in action this morning, Bharti Airtel.
Yes, Bharti Airtel has also added about 15.2 lakh subscribers in July compared to about 14.1 lakh new users back in June. Now, Bharti Airtel's share in the overall telecom sector currently stands at about 32.74%. The stock has seen a fair bit of run up. A couple of weeks ago, around 10 brokerages gave a buy call on the stock with a target price of about 1,000, and as a result, the stock touched a 52-week high. Now, over the last month, a couple of weeks or so, we have seen some moderation, but buying activity picking up at the lower end of that range that we are talking about.
All right, and also Infosys down 0.5% this morning.
Infosys is down, but the stock has run up about 10%. It's actually been one of the turnaround stories in the IT pack.
Yeah.
And if you remember back when the first quarter results came out, Infosys was the worst hit stock in the bellwether IT stocks. It was, it corrected by 6-7% or so. The company cut its guidance. There were a lot of concerns about, the revenue outlook for the company. But see, in the last 2 months, it has landed contracts worth about $5 billion or so. So FY24 outlook still remains muted, at least from what that's what brokerages are saying. But FY25 could be a turnaround year for most IT stocks.
Exactly, not just Infosys, isn't it? Infosys is the bright spot amidst the sea of grim in the IT pack, isn't it, Kush?
Oh yeah, for me, this is a story of, as they say, that it's a tale of two halves. If I start from Jan 2022, when the stock made its high, it's just been on a downtrend, and it's actually been a bit of a frustrating, move. Even when the, some of the other, large cap names actually did well, this was perhaps, a rank, underperformer. Now split that and look at, mid-April 2023, when the results were announced, the low was made, and from there, the stocks actually started to make a very strong comeback. In fact, I was one of the few, voices which said that, once this, news is out, perhaps the worst is over and we should start accumulating. And that was at about 1,200 odd levels. I still maintain that view. Although I see the momentum coming into the stock once it crosses and sustains above 1,500, I would say that, the tide has turned for the better for Infosys, and it's not a bad idea to start looking at it from, an investment perspective. The recovery seems to be on a strong footing, despite the kind of, dips that we've seen across NASDAQ. This stock's actually not really done as bad, perhaps in line with the markets, perhaps some profit booking.
Okay.
But overall, the setup looks strong. I think we should look at it from, an investment perspective, 1,600 plus kind of targets, let's say by, the end of the year.
Kush, I also wanted to get your view on the overall IT pack. Now, yesterday there was a report from Morgan Stanley, and it has shared a bullish outlook on some of the bellwether stocks such as TCS, HCL, Infosys. It has also raised the target price. What will be your pecking order when it comes to the large cap blue chip IT stocks?
Okay. First up, I share the enthusiasm. I think that, the IT stocks are ripe for, cherry picking right now. As far as my pecking order goes, we've been very clear, HCL Tech is the top name, then comes Infosys, and now, TCS. Very honestly, Wipro is not something that, we look at, because, once you've got enough of, the large caps in your portfolio, the next stocks that you'd pick are perhaps from the mid cap space in the IT names, like the likes of Bsoft, the likes of Persistent. So I'd move to that. So from the large cap names, HCL Tech and Infosys and TCS are, some of the names that we have.
All right.
Interestingly, there are other names also, if I can take, quick 30 seconds.
Quickly, please do.
Sure. Something like a KPIT Tech, which doesn't fall under the pure gambit of, IT services, but something like KPIT Tech from the mid-cap space is also something that we have on our radar.
So clearly, the pecking order is there from Kush Bohra. If you're not picking from the pecking order of Kush, then go for mid-cap IT stocks. And there itself too, he has certain picks over there. But Kush, thank you so much for sharing us that wisdom as far as the Indian IT pack is concerned. One more thing we want your wisdom for quickly. The talk of the town as far as traders in India is concerned, stock market traders in India is concerned, the possibility of longer trading hours, Kush, 6 p.m. to 9 p.m. It's not a reality as yet, but there is arguments back and forth. Some say it's great to hedge risks and all the shocks of the global markets. It's good for that. But others say it's too much work with not enough money.
Yeah, I fall in the second camp because it is too much work for me as well. And I think a lot of us, analysts, traders, we fall in, under that, are of that opinion. It is, a little too much. And we know how taxing 5.5, 6 hours of, undivided concentration can be. God knows what another 3 hours, we'll do. So yeah, fingers crossed. Hopefully that comes a little later than sooner.
Oh, Kush, we had this conversation with Shreyash saying that yesterday we spoke to Mr. Ambarish Baliga and we asked him the same question. He said, "I'm not a trader. For me, this doesn't make sense. It's just more work." And we thought, hey, maybe if we speak to a trader, they'll have a different opinion. Looks like that's not the case. So, Kush, but anyways, it's been a pleasure talking to you. It's always a pleasure talking to you. Thank you so much for joining us. And of course, Suyash, as always, putting the day's market action into perspective. And with that, we sort of wrap up this morning's trading sessions coverage. It's time now for a very important programming note. The big show tonight at 10 p.m. on News 9 Live. Duologue, TV9's MD and CEO, Mr. Barun Das, in a candid conversation with business tycoon and philanthropist, Mr. Narayana Murthy and Sudha Murthy. Take a look at this sneak peek.
Mr. Murthy, 25% of our population is below the age of 15. How do we make them involved in this growth story?
The leadership at all levels, in the country, they have to embrace good values, but it will still take some time.
I think we are not nurturing and leveraging 50% of our strength, which are the women.
Yeah, one of them has to step down and do that.
If you had donned the seat of chairman, maybe by now Oxford or Cambridge would have had chairwoman as a legitimate English word.
Duologue with Barun Das, featuring N.R. Narayana Murthy and Sudha Murthy. World premiere on Connected TV. Tonight at 10. Only on News 9 Live. India's first and only digital exclusive English news stream for Connected TV. Supported by Alliance Broadband.
So make sure you catch Duologue tonight at 10 p.m. only on News 9 Live. And with that, we continue to move on here on the show on Business Plus, because a very important story that we're going to bring to you, and that is about diamonds. Did you know that 9 out of 10 polished diamonds in the world get polished right here in India? That's the power of India's diamond industry. But unfortunately, at the moment, India's diamond industry is at a 5-year low, and that's because exports are down over 30%. And to talk more about that, I have my friend and colleague Karthik Malhotra now joining us in the studio. Karthik, very good morning.
Morning, Krishna.
Stock markets are one trade. The other trade, possibly even before stock markets, was the diamond trade in India. It was one of the oldest trades in the world, and that is in deep trouble at the moment.
Absolutely. And Gujarat being central to both stock market trade as well as diamonds. So the story actually starts and ends with Gujarat in this particular case, specifically in the case of diamonds. So you're right, 30% decline in demand for diamonds. Now, if you look at it over, let's say, a period of the last 3 years, it seems to be a structural issue with demand for diamonds, the cut and polished diamonds, which India is the hub for, reducing as much as almost 60%, 59% or so over 3 years. So the industry is now fairly certain that this is not a cyclical problem. It is pretty much a structural problem. And where is this problem really emanating from? Who are our largest importers of Indian diamonds? You have US and you have China. US exports, out of the 9 out of 10 diamonds that we sell to the world, US in fact imports about 50% of that.
Wow.
So 45 to 48% is the share of US imports. About 13 to 15% is the share of Chinese imports. Both of them dealing with their own sets of problems. There is a major slowdown in China, the property crisis, which has resulted in people holding on to their money in China and not really splurging in luxuries like diamonds. And a similar problem in US, not as much with the economy slowing down, but with inflation. So inflation, slowdown, put together, demand for Indian diamonds at pretty much an all-time low. Now, what has the industry body, the 3 industry bodies, which is JGEPC, the Gems and Jewelry Export Promotion Council, and the 2 bourses, which is the Surat and the Bharat Diamond Bourses. What they have done is they have now, for the 5th time in their existence ever, halted import of rough diamonds, the rough stones. So that has been now put to a halt for a period of 2 months between 15th October to 15th December. Now, what are the previous instances of such a halt in imports ever occurring? No points for guessing. 2020, COVID.
Okay.
2008, the global recession, financial crisis. 1991-92, India's balance of payment crisis. and once before in 1973, where there was some issue with Saudi Arabia. I don't know what, I haven't read history
All
that
right.
much, right?
Okay,
So it's the
70s, one in
70s,
90,
one in 90s, and the third
2008
instance in
and COVID.
2000s, right? So, so diamond import, rough stone import halted for 2 months. Overall, year on year, 30% decline. Over 3 years, 60% decline. A structural issue, not a cyclical issue. And add to that, there is competition. There is competition from lab-grown diamonds, which are cheaper, inexpensive, easy to produce, not really natural, so you don't really need the coal mines to excavate them and get them produced. So,
but
problems
Karthik,
of
isn't
multiple
India
kinds.
leading that change for lab-grown diamonds as well? Because we saw the Prime Minister go and gift Indian lab-grown diamonds.
The green diamond. Yeah, I think, you know, it's still early days, because
Correct.
at the end of the day, why do you buy diamonds? Just like why do you buy, gold has a very different story, right? But, you know, precious metals always fetch a great resale value, and you buy gold to hedge against any uncertainties that could arise out of currency exchange problems, stock market crash, whatsoever. In the case of diamonds or precious stones, the game is a little different. You buy it for its value. So the connoisseurs, people who really want to purchase or own a piece of inventory which is precious and not easy to replicate, will still, I believe, want to opt for the natural diamonds. But there is a case being built for jewelry, especially for lab-grown diamonds also, where India is, of course, one of the front runners.
All right, just one thing that came to mind, you're talking about the value and the hedging. You're saying that most of Indian diamonds get sold in the US, and I'm guessing most of them are proposal rings, diamonds that
Solitaires.
solitaires that get sold over there. That is seen as a hedge for that relationship, that ring as well.
Given the divorce rates that you have in the West,
There is no
especially
hedging
US,
with
I don't
diamond
think there's
rings.
any hedge there.
With that divorce rates, there's no hedging with diamond ring. Karthik always making sense first thing in the morning. But Karthik, talking about downtrend, the worst downtrend in 5 years, it's not just diamonds, is it? Because there's another downtrend that's happening as we speak, and that is with the startup space. The startup funding winter has been spoken about for a few years now already, the funding winter, and looks like that funding winter has frozen over, because startup investments in India are at their 5-year low as well.
True, Krishna, but you know, I see a little bit of optimism. Kush was mentioning this, you know, this ray of hope, this silver lining, you know, as I see it, and let's look at the data. Now, over a 5-year horizon, of course, we have seen this being the worst ever year in terms of foreign investments coming into Indian startups, right? Overall, if you look at it year on year also, investments into Indian startups are down to about a trickle, I think down to about half of what they were last year, $1.5 billion or so. 2021, 2020, 2021, 2022, we had billion-dollar valuations almost every second week. We haven't seen any addition, barring one, to India's unicorns, which are $1 billion plus in this calendar year. Just one unicorn addition this year. Zepto, right. And Zepto is facing issues of its own, but we leave those aside right now. But we haven't really seen the kind of easy money flowing into India.
Right,
so we have seen a 5-year low. We are seeing a year-on-year decline. Even on a sequential quarter-to-quarter basis, we've seen investments really coming down into Indian startups. But the silver lining, month on month, August to September, there has been an increase as much as 91%. We've almost doubled from about $300 million flowing in, $350 million flowing in, to almost $700 odd million flowing in. So overall, month on month, sequentially, I see the freezing over of the winter really beginning to thaw a little bit. Let's hope this momentum continues, because we've got to look at it also in conjunction with the angel tax, which we discussed in great detail yesterday, and maybe our viewers should go and search for that video on angel tax, where we had Siddharth Pai really explaining it threadbare to our viewers what this angel tax and the impact on startups. Now, what is also likely to happen is, with this fair market valuation coming in, I think raising capital beyond a certain fair market value for startups is not going to be lucrative, because at the end of the day, they'll have to pay more tax on it. So it seems that at one end, while this funding winter will begin to thaw, and hopefully that upsurge should begin, because we've seen interest rates in US also pausing right now. US Treasury yield may not be as attractive in the short to medium term horizon as it was all of last year, when we saw rate hikes, you know, month after month in the FOMC. And India is also now finally, you know, the stock market seemed to have settled. You are covering this for the last 1 week or so. We've seen pretty much flat trade almost on a daily basis. So there should be some case for investors to come back into looking at Indian startups a little more seriously. But those, you know, multi-billion dollar, tens of billion dollars, decacorn sort of valuations may now become unviable or unproductive or or not really as lucrative as they were for Indian startups with the angel tax rules coming in.
Right, funding winter, with or without funding winter, it's really our own ability to regulate startups, and the regulations around startups in India is going to really define the growth of startups from here going forward, funding coming into startups going forward. But we will have to wait and watch as the proverb goes, because so many uncertainties when it comes to startups at this stage. But we will leave that be for a bit. That is a funding winter. Let's talk about hot things that need to be made hot, things that need to be steamed,
okay,
like rice. Like,
all right.
Okay.
I was wondering where you're getting with that.
So, okay, from cold to hot, rice. It's been a topic of discussion in India. We Indians consume rice from north to south, east to west. There is absolutely nothing blocking us from consuming rice, irrespective of which culture we belong to in this country. And we sort of started holding on to our rice like our dear life because of prices going through the roof, and us making sure that people in India do not face any shortage or any price rise when it comes to rice. But looks like that winter of holding on to stocks is also thawing, because we're willing to send more and more rice outside of India. First, it was the United Arab Emirates, and looks like now India wants to export more rice to Singapore.
That's right, Krishna. I think, rice is as secular, as democratic as it gets, because it's not just north, south, east, west in India, but all of Asia.
Okay.
I think it's a rice-consuming belt. If
Yes.
you look at any Oriental cuisine, rice becomes a staple diet.
Absolutely.
Go further down to, America, southern part of America, Mexico, rice is part of, everyday
I was just about to
cuisine,
say
right?
it. Yeah.
So rice now... fortunately for India, unfortunately for the world, India is a major contributor to the rice basket of the world. So different estimates suggest anything between 40% to 60% of the world's rice is actually produced here in India. And India then exports that to other parts of the world. Now, a lot of developments over time. What have we been dealing with here domestically? We've been dealing with, barring data that came in earlier this month, we've been dealing with high double-digit food inflation. Rice inflation touching almost as high as 18%, 19%. So India had obviously, vested interests in holding on to its rice, and they said, let's try and keep the rice price low in India and put some restrictions on exporting the non-basmati white rice anywhere outside of the shores of India. So that got implemented on 20th of July this year, if I'm not mistaken. And it's been about 2 months since we have not really been the contributor to the rice basket of the world, barring a few countries which were facing some sort of a food crisis, humanitarian crisis. That included, in the original lot, Singapore, as well as Bhutan and Mauritius. Now, we have in the past opened up or sort of become a little more flexible in exporting rice to those 3 countries, and also to some parts of North Africa which were facing a food challenge. Add to that one leeway given to UAE last week, where we said that we are going to export 75,000 tons of rice to UAE and at a reduced minimum export price of about $850, reduced from about $1,200 per ton to about $850 per ton. Now, Singapore is now again, it hasn't really been able to overcome the humanitarian food crisis that it's facing right now. So another 50,000 tons of rice is likely to be exported to Singapore this month itself. Now, on the positive side for the rest of the world, and hopefully even for India, the Kharif crop is likely to yield good results this year.
Okay.
And we are hoping that this overall export ban on rice of any kind, white rice, non-basmati or basmati rice, should get lifted by end of September or as soon as the Kharif crop comes in. Hopefully, with 10% more hectareage, arable land that we have aggregated this year, there is likely to be better Kharif crop hitting the markets. But then we've also been dealing with unseasonal rainfall, which could reduce the yield per hectare. So let's see how much rice we get. But this ban is definitely likely to be lifted in a couple of days from now.
All right, so all eyes on October for the Kharif crop to come through, and going by the famous Green Day song, Wake Me Up When September Ends, so that we can figure out our rice situation. Interesting to always note the fact that the curb on exports was for non-basmati rice. for two reasons. One is that it is not the premium rice. It can be given for consumption for more number of people in India. And two is the fact that India makes tons of money by exporting basmati rice.
Absolutely
so
right.
you clearly don't want to stop the export of basmati rice.
But even on the premium basmati rice, the minimum export price had actually increased to about $950 per ton, because what Indian traders were doing fairly smartly, that they were branding non-basmati rice as basmati rice and exporting it as basmati for consumption as non-basmati. So to sort of to challenge that hoodwinking of the system, the MEP on basmati was also increased.
We have a term for this. It's called
Innovation?
jugaad.
Jugaad? Okay,
it's
sure.
called
Bring
jugaad.
it on.
So this is the rice trader jugaad that's working for India. I mean, it's all about doing business and doing business smartly. And who better than Indians who have been doing business smartly for centuries? Once upon a time, India and China.
Thin line between doing it smartly and doing it ethically and abiding by the rules of the law and not sort of evading all the curbs. So
well, the point is that
I'm not sure I'm going to celebrate that yet.
Okay, well, all I can think of is that somebody sitting in Europe is not going to be able to tell the difference between a basmati rice and they're going to think, oh, Indian rice, and they're going to just go for the Indian rice, quote unquote. But anyway, that's another debate for another day. But for now, the news is that India will be exporting more and more rice to the United Arab Emirates, and the latest is that Singapore as well. But talking about trading and cross-border trading, Karthik, there is something else important happening when it comes to cross-border trades. Away from rice, which is a cash crop, let's talk about the biggest cash crop in the world. It's called crude oil. And India has been the largest consumer of Russian crude oil ever since the Ukraine war began. The only problem is that India is not able to get some of its assets in Russia, money of India stuck in Russia, back to India, because Russia is out of the SWIFT global financial system. And there has been issues about bringing Indian money back. And now, the latest we understand, you've been telling me about this as well, there are efforts made to iron out the rupee trade settlements between India and Russia. Now, I know for a fact that there is money stuck that we can't bring it back. That's one end of the issue. But whether that's money stuck or not, India has been pushing for rupee trade settlements with not just Russia, but across a range of countries. Talk to us about what's happening with Russia, specifically speaking.
Okay, it's actually a little more complex than that, Krishna, and it's not as much about our money being stuck in Russia than Russian money, rubles stuck in India, which Russia is not able to take back. They're saying, hey, what am I going to do with, if I'm unable to convert that money into dollar, and if I'm not part of the SWIFT code, then how do I get my money back? So that is actually at the crux of the problem. Now let's go back a little, and ever since the start of the Russia-Ukraine war, we have seen Western sanctions on Russia, and hence dollar is nothing more than a piece of paper that Russia can pretty much make aeroplanes out of and fly, because it doesn't have any value for US dollars. It can't convert it back into rubles.
Right.
So what Russia started doing, and which India also grudgingly agreed to, was to settle trade bills with Russia in the yuan. So India has actually been buying yuan to transfer yuan to Russia, bypassing the Western sanctions and the SWIFT requirements by actually settling trade in yuan. And that is something that has hurt India, obviously, economically and nationalistically. So, and for other reasons as well, more sort of macroeconomic reasons, India wants to settle trade with any country in INR. And Russia, of course, being a large country which exported its oil to India, and India bought it dirt cheap, oil cheap actually, has now landed up in a situation where about $43 billion worth of trade deficit with Russia is now stuck in India. So what did Indian government do? India actually has something called a Vostro account. What is a Vostro account? Any foreign entity can own an INR account with a bank in India. That's called a Vostro account. Now, what you can do is you cannot repatriate the funds back to your home country, but using that Vostro account, you can actually cater to other business interests you have in the country with the money in that bank account. So $43 billion are stuck in Vostro account of Russia in India, which Russia wants to repatriate back, but is unable to because of the sanctions, and has actually invested about $10 to $12 billion of that into Indian bonds, the government bonds, so government securities. So overall for India, it's a good story that you have $43 billion worth of Russian trade deficit here in India, which is used for other economic activity within India. But the problem is for Russia, because Russia is unable to convert that money back into rubles and transfer it back home. And in the same light, India is pushing for rupee trade settlement so that this problem of rubles or dollar equivalent rubles being stuck in India does not arise, and all this $43 billion can actually just become rupee, which India can then use as rupee rather than any conversion or any sort of forex fluctuations being subjected to.
Right, that's as far as rupee trade settlements are concerned. We have completely run out of time here. One last thing, Karthik, before we let go. We're talking about all the biggest things in the world, from crude oil to rice exports and etc. etc. One of the most important things in the world is certainly Candy Crush, Karthik. And Candy Crush is making billions of dollars. $20 billion Candy Crush is made. Tell us what's going on over there.
So Krishna, I mean, any news about Candy Crush, anytime you read this in the papers, the mind races back to about 10 years ago when, night shifts, doing edit, you're sitting on Facebook and you're sitting and playing a game like Mafia Wars and Candy Crush like zombies because you want to stay awake. But yeah, I mean, people like us, a lot of people like us, almost 5 billion people like us have actually played and admired Candy Crush over the last 10-11 years of its existence since 2012, and it has finally, the company has touched that milestone of $20 billion in revenue. Now imagine this, $20 billion, big number, no doubt, but look at it in context. Now Candy Crush was made by a game maker called King. King sold Candy Crush as a brand to Activision Blizzard. Activision Blizzard got bought over by Microsoft. For how much? For $69 billion. Now, by any logic, and Activision Blizzard also makes Call of Duty. So, right, its precious gems are Call of Duty, Candy Crush.
Candy Crush.
Candy Crush alone making $20 billion in revenue. By any account, I think Activision Blizzard would be crying blood today, saying that we sold ourselves cheap to Microsoft.
Well, that's happened with many tech giants as well.
Yeah,
many products being sold tech giants at really cheap valuations. I'm afraid we can continue discussing that, but we've completely run out of time. Thank you so much for watching. This is Krishna Kumar signing off.
Mr. Murthy, 25% of our population is below the age of 15. How do we make them involved in this growth story?
The leadership at all levels, in the country, they have to embrace good values, but it'll still take some time.
I think we are not